Okay, sorry. I think this is different agenda today. We can
Yeah.
have a conversation in our group.
Amit, Deepak, shall we start? If
Yeah, sure. Go
uh,
ahead, please.
9 minutes past. Yeah. Good evening, everyone. Thank you, everyone, for joining. This will be a just short presentation and followed by interaction among us, so that we regularly have this meet and we take it to a next level instead of just messaging in the group. Many of us would be investing in direct stocks, mutual funds, and many would be having small or significant allocation to Indian or domestic equities. Now, this topic is all about international investment. Why do we really need it? So, the aim of presentation is to impress upon need for global diversification and also to impress that have no emotions for home country bias while investing. Being nationalistic is different thing, and when it comes to money matters, one should be blunt and one should be sharp, and it should be more of diversification. So all this without going into complicated financial jargon and charts. There are many pair presentations which will show you this chart that if the international market is up, Indian market is down, and vice versa, and nothing mathematical. It's pure logical discussion and presentation over here. So we rely a lot on overseas products, right from the time we wake up to the time we sleep, and even while we are sleeping, many of the products are overseas. Even if the companies are producing the products in India, they have the headquarters outside India. So basically, they are trying to garner to Indian customers and fill the pockets of the headquarters situated outside India. So if we make a list of the products, they are never ending. So in short, here is the list. Right from the time we wake up in the morning, the brush which we use, Colgate or Oral-B, is again a US-based company. Even though Colgate Palmolive is listed in Indian stock market, the native company is American company again. So personal products like Gillette also, the personal hygiene products are again mainly outside India. Johnson and Johnson products, which we use for the child or for many other things, are again overseas products. At the breakfast, we have Kellogg's Cornflakes. That's again a non-Indian brand. And many of us which who are in the group are using WhatsApp messages on iPhone or Samsung or Oppo or any other mobile. They are again non-Indian brands basically. Samsung Mobile again, one of the most commonest used Android operating system, is a non-Indian brand again. And we cannot think of our world without the Google ecosystem, starting from Gmail to Google Maps, then Google Drive, Google Hangouts. There are lot many products here. YouTube. Every one of us are addicted to YouTube in one way or the other. We consume the data to a tremendous level. And coming to the Microsoft ecosystem, Microsoft Windows is the most commonest operating system for laptop. It's again a US-based company. And in Microsoft, there are other products like Microsoft Word, Excel, Microsoft Teams, Outlook, PowerPoint. So this presentation is right now on Microsoft PowerPoint itself. So it's a non-Indian brand again, and we rely on our day-to-day necessities on all these products, which do not have any Indian counterparts. The footwear which we use, Adidas and Nike, are again non-Indian brands. Cars, Toyota, Hyundai, Suzuki, again are non-Indian brands. Even though Maruti Suzuki is listed in the Indian stock market, the technological thing and know-how is from the Suzuki counterpart again. Snacks and the drinks which we use, be it Starbucks, Pizza Hut, Coca-Cola or Pepsi, are again non-Indian brands. The entertainment which we use, Netflix, Amazon Prime, and also we order many of the products from Amazon are again non-Indian brands. So why should we invest or why should we diversify outside India? If we are just restricting our investments to India, we have a home country bias. So many things can go wrong, like what happened in Kargil war. It's a local geopolitical risk factor. Change in the political leadership. If there is a majority government, the stock markets will also cherish. And if there is a coalition government, the returns of the stock market or the inflation level or the GDP level is again dependent on a stable government. A coalition government may not do the justice to the general thing. Brexit. We saw Brexit happening in British. where the UK or United Kingdom exited out of the European economy, and this led to sudden fall in the United Kingdom market and also devaluation of the currency, that pounds, to a certain level. Now, uh, this is the first anniversary of Russia-Ukraine war. So we have seen the Russian markets tumbling down to a rock bottom. So the same scenario can happen to any of the country. So if we are restricting our investments to one particular country, the same geopolitical risk can happen. Russia was once upon a time a good market, but because of this local turmoil, it has deteriorated rapidly. We know about Sri Lanka civil war going on. They were running out of the fuel. We have seen Turkey earthquake happening. We have also been following the Pakistan is nearly bankrupt, and they are implementing various measures to bring down the government expenses, and also requesting the citizens not to travel in first class or business class and avoid luxurious items. And also we are aware that historically rupee depreciates compared to the globally used currencies like US dollars, euros, British pounds. So we are also subjected to the currency devaluation, which is occurring year by year. And one more important thing is each country has its own specific growth trend and inflation. So it is again developed economy versus developing economy. As being a developing economy, even though we have reached the fifth largest economy in the world, we are yet to reach to the top again. So here is a simple farm village game which all of us would have played. Now we can see here multiple fruits and flowers have been planted over here in this small garden which we have in the farm village game. Some flowers are there, some fruits are there. So what we do, we basically plow multiple seeds of various flowers, fruits without any bias. When we start the game, whatever we get with the money, we just take the seeds and we plant it, and it just shows the time clicking. That's a game. But the same concept can be applied to our day-to-day investments and keep it extremely simplified. We do not need complicated charts to understand the things. We just need to learn it from the day-to-day things. So here we can see the person has also diversified by having cows, sheep, etc. Sheep for the wool, cows for the milk and milk products. So one does not need to know which seed is growing in this soil. We simply sow the seeds, and at least many of them will grow and flower or produce the fruits, and the fruits can be sold, and this is how we benefit from it. So just like farm village game, we have no idea which plant tree will grow. We cannot predict which country GDP or markets will grow to what level. We may be in a highly good mood that Indian markets are soaring up and up. They have reached the 60,000 mark on the Bombay Stock Exchange. We do not know going forward how will the Indian markets react. We also cannot predict the same thing about US market. We are in and out. The recession is coming. None of us can predict it for sure what exactly is going to happen. So we have no idea which country will develop to what level. So just like the game, we can have a simplistic portfolio where we invest unbiased across the globe as per the market capitalization. So now here you can see in the top chart, America, if we consider all the giant companies of the world and give them the ranking 1, 2, and 3, depending on the market capitalization, we'll find 56.17% of the companies are from United States of America. Next, 6.28% of the companies are from Japan. 4.23% are from United Kingdom. 3.46 are from China. 2.98 are from Switzerland, and 2.72 from Canada. We can see India still making it to the list, and it has 1.8% of the share. So 1.8% of the largest companies are also situated in India. So if we are investing only in that, we are missing the bigger picture over here. So there is a market well beyond India. The products which we use day in and day out are much more than what Indian products we are using right now. So the same farm village game can be extrapolated to this investments again. Like how we have grown multiple seeds, flowers, fruits in a simple farm over there, and we are diversifying the risk. Sometimes the flowers may wither. At that time, some other fruits may definitely grow in that soil, weather condition, and other things. So the basic aim is diversify, have a plantation of various fruits, flowers. Even if some wither, the others will definitely survive and make it up. and they will make good the shortcomings of the any loss which may happen. So again, if we are investing in a globally diversified portfolio, we are also diversifying across the currencies. So many will just have attachment to United States dollars. They assume that dollar is always going to appreciate. It is true till now. Going forward, we don't know what is going to happen. So by having a globally diversified portfolio, you are also having exposure to multiple currencies in the following order, like United States dollars, euros, Japanese yen, sterling, Hong Kong dollars, and also Indian rupees. Indian rupees has just a weightage of 1.75% in the whole global economy. So this is how our garden should be. Not just India, where we are discussing day in, day out about the direct stocks. Take Reliance, take Tata Motors. It's a very, very small market compared to the market outside India. So our portfolio should be diversified across the world without having any bias for the country. It doesn't mean we are not nationalists. It just means that we are respecting our money and we are also diversifying our risk across the globe. So the points here are that this constitutes 2% of the listed business of the world. What does it mean? It simply means that 98% of the business, those products and services which we use on day-to-day basis, is situated outside India. So by not investing outside India, we are missing being the owners of the companies, the products of which we consume on day-to-day basis. Any one of us can have a homework that we make a list of products which we use day in and day out, right from the time we wake up till the time we sleep, and we will be surprised that majority of the products are not Indian. Even if they are produced in India, many of these companies may have headquarters or the switch centers outside India. So basically, even if we have KFC, which is producing chicken in India, they have the headquarters outside, that's in USA. So basically, they are having customers in India, and this whole income goes to KFC, which is an American company. So even the companies, big companies like KFC, McDonald's, Pizza, Microsoft, iPhone, Samsung are having their income outside their country of origin. Let's say Samsung is a South Korean company. Majority of the business is not from Korea. It's from India, United States, European countries. So they have also diversified their income and they have their majority of the income outside the country of the origin. So the point is, don't just be consumers. Be a business owner in the products we use on daily basis. And also we are aware that historically, Indian rupees depreciates compared to any globally accepted currencies like United States dollars, British pounds, euros, Singapore dollars, or Canadian dollars. So by investing across the globe, we are also diversifying into multiple currencies and their markets. So one market may perform well, the other market may underperform. None of us can by sure predict which market is going to perform to what level. So diversification is the key. Global investments diversifies our investment across multiple markets and multiple currencies. And in the long run, it provides inflation-adjusted risk with risk management. And it also insulates us from the local geopolitical risk factors which may happen. Every country, for that matter, has its own geopolitical risk, whether it's the governance risk or whether it's the risk associated with the neighbors. Like India and Pakistan have always been on war heads ever since the independence. We do not know when the next full-blown war can happen. If such a thing happens, definitely our investment will also be hit hard. Be it real estate, be it gold, or be it equities, it will take a major hit. At that time, if the country is not safe, even our investments are not safe. That is one aspect. But there are ways to safeguard that investments also. And the simplest and easiest technique is by diversifying our investments across the boundaries, not just restricting to India, which just has 2% of the world's listed equity. Also, big companies, as we already discussed, Apple, we have Apple stores in India, we have Samsung mobiles in India, we have Pizza Hut everywhere, we have Domino's, we have all the multinational companies which have their outlets in India. So what are they basically doing? They have their customer base in India, China, and world over. basically they are making profits out of the customers outside their home country. Their home country may be US, their home country may be Japan, their home country may be Korea. But even then, these big companies are having their customer base outside India, outside their country of origin. So basically, they are also diversifying. So we as a retail investor should also follow that same track and also diversify our investments across the globe, not just restrict to India, not just keep thinking about small cap, large cap funds or mid cap funds or individual stock selecting, because investments are not going to be 1 or 2 days affair. It's a lifelong thing which needs to be managed. This is the short presentation, and without going into the graphical details or anything related to that. I have close to 29 members, so some, at least some, would definitely be investing overseas.
You're on mute.
Sir, voice is not that clear, sir.
Clear now, Asuman?
No, your voice is not that clear, sir.
Just a minute.
Hey, can you hear me?
Thank you so much for the presentation, Deepak sir.
Do we have any developing markets FOF?
We don't have any developing markets FOF, but there are various platforms where we can invest in the developing market ETFs too. Again, there are platforms.
ETF means we need again demat account, right?
No, not demat account in India. None of the demat accounts in India can directly invest in those ETFs. It is by a way of they will be a sub broker, and they have a tie-up with US entity or non-US based entity. Like we have Zerodha here, which is the most commonest platform. So Zerodha is the stockbroker here where we can individually buy and sell Indian stocks. But there are various platforms in India which had tie-up with some platforms of US like Drive Wealth. And the Drive Wealth is one of the biggest broker, and they have the tie-up with them. Other broker is Interactive Broker. ICICI Direct has a tie-up with Interactive Broker. So by way of them, we can invest in the developing ETFs also. But the problem which has happened is we are aware of the TCS of 20%, which will be implemented from 1st of April, right? 20% of it. That will get against the future gains, future taxes and all. But the issue is 20% of the amount is going to be stuck unless you file the IT returns and claim it back. So if you are investing 100 rupees overseas by this direct route, 20 rupees will be stuck in the next tax filing. That's a huge amount, depending on what we invest. Presently, for Indian scenario or Indian investors, mutual fund is the preferred route. PGM, Global Opportunity Fund, is again an active fund. It's a feeder fund. So feeder funds, we do not know how they perform. Like how we have the upbringing of index fund in India, like many investing Nifty or Sensex. Same way, there are funds in US much bigger, and the fund house is Vanguard. So there are Vanguard funds which are domiciled in USA, which are domiciled in some other countries like London Stock Exchange, where we can invest. Yes, SDFC Developed Market Fund is there. So that's an index fund for developed economy. We do not have any FO for ETF from the Indian fund houses which are investing in developing economy. There are active funds, but not passive index funds out there.
Yeah, that's the reason I'm saying if any developing markets fund is there, we can put some 1% there. We can increase 1% here and there.
I personally believe that we have to have a substantial amount of any investments in particular asset, even if it's an international investment, at least 15 to 20% should be in overseas.
Yeah,
then only to benefit from it.
yeah, we can slowly increase, but yeah, I think 10-15% is good enough.
Regarding Vanguard, what is the route to invest in Vanguard? I don't think there is a proper route in India.
Sir, are you based in India or outside India?
So,
Yes. Are you based in India or outside India, sir?
based in India.
Yeah. If you are based in India, there are several routes to invest there. Like you can directly open up an account with Interactive Broker if you want to invest in the Vanguard. So Interactive Broker have their offices in Mumbai only. So one destination, but they offer online account opening for Indian residents. So problem with this is the transfer cost. You are aware of the transfer cost. That's a thing which should withhold the investors from investing there, because rupee you'll have to convert into dollar. So there is a
Like
cross.
like in Sarva. Sarva also has transfer cost.
Yeah, transfer cost. But the transfer cost, it depends on the bank. If you use some banks like HSBC, they offer good exchange, whereas other banks like even ICICI Bank, the exchange rates are not good.
Yeah.
SBI also, the exchange rates are not good.
HSBC you don't find in many cities.
Yes, sir. But see, sir, in global trend, we don't need to have a bank next to us. We can open up an account anywhere, and it's quite easy. You are opening up account in with Sarva, where you have not personally visited anytime. We are opening up account with Interactive Broker, which is situated in USA. So in this digital world, where is the branch doesn't or should not really matter.
You
Like
mean to say that we should open an account in HSBC for Sarva or for Interactive?
if you're a long-term investor and if you want to benefit from the lower cross currency charges. But the other thing is, you are aware of TCS right now, right, sir? TCS. Tax
Yeah.
collected. So if you are transferring 100 rupees out of India, 20 rupees will be at any bank and will be deposited with the IT department. And this will be adjusted in your income tax filing. So if you are investing on month basis, for every 100 rupees you send outside India, 20 rupees is going to be deducted. And it's only 80 rupees which will make the money work over there. So that's a huge drawback. Because
You can
investment,
claim that 20 later on. No?
yes, you can claim, but it will be at the time of tax filing, right? So for 1 year, let's say on an average 1 year, that money is not put to work.
So 20% is the expense. You can take it as that.
20% is too large expense.
Exactly.
So if 20% of your money is just lying idle with the government over there, it drastically put on your net worth. And also
Then I feel mutual fund is the only way out.
easy way out. Other thing is, we can have a RD, recurring deposit, let's say, and we accumulate a big amount. It serves two important advantages. Many of us do tax filing in April month, right, after the financial year. So we can have a RD which matches in March, and we can transfer the whole amount at one go overseas, and then have SIPs there. And also the next month you can claim the refund over there. So basically for 1 or 2 months the money is going to block 20%. If
But
one
you
is a long,
don't get the refund so soon.
no, even, let's say it takes 1 or 2 months. So 2 months you can keep the buffer instead of 1 year, whole year.
So you mean to say that you invested in January, February, so that you get the return in April or May?
Yeah, right. So transfer the whole amount at one go. It will bring down the transfer cost also, because every time you are transferring, 2 to 3% is lost, and you are paying GST on every transfer.
You don't have, then it won't be an SIP, it will be a yearly investment.
No, yearly investment, you basically are converting in dollar. And now let's say in March month, some dollars are sitting there in the overseas broker. And then place a SIP for the next months. But like monthly you invest. Let's say you have accumulated $10,000 there. So every month you invest $1,000 from that platform. That will be also averaging out the cost.
Means you transfer at one go and then you do an SIP from that particular account.
Then you do SIP because that money is sitting there. Now, interactive broker, if you have a large money sitting, they will also offer you interest rate of 4.08% on the cash sitting there.
Mm-hmm. So you mean to say this interactive broker will offer this interest, or the HSBC will offer this interest?
So, if you are transferring money to interactive broker, and if it is sitting as a cash in dollars there, they'll offer interest on that.
Okay, so you mean to say, first of all, we open an account with HSBC and then you transfer it to the interactive broker, so that with HSBC you have a lesser exchange rate also,
Yes,
and
yes.
you accumulate in the interactive broker, and then you do an SIP from the interactive broker's account.
Yes, yes. So once a year you transfer a big amount, that will bring down the transfer cost, because every time you're transferring, let's say people who are transferring even 50,000, the transfer costs are high. So every time it is 3 to 5% eating up the things. If the transfer amount is larger, let's say 3-4 lakhs at a go, it brings down the transfer costs, right? We are paying the fixed amount, but if the amount is less, we are ending up paying more.
Yeah, the transfer cost is not in percentage; it is a fixed amount for any particular amount.
Yeah, it is a fixed amount. In the HSBC, it's a fixed amount, only the GST. But if the amount which we transfer is less, that amount, fixed amount also becomes more, percentage becomes more. But when the amount is bigger, that transfer cost becomes very small.
Mm-hmm.
So
And
Deepak
how
sir,
is this
can you hear
superior
me?
to Sarva?
Sarva, there are two platforms, Sarva Trade and Sarva Invest. Now, Sarva Invest is extremely good. If someone is at Sarva Invest, they don't have to worry about the estate taxes. Now, many platforms in India, they always speak about Ind Money. Ind Money came up with many things that we will do immediate transfers, other things and all. What they don't do is they don't educate the investors about the risk of investing directly with the US. Because US, there is something known as US estate taxes. Now, if
Mm-hmm.
the assets in USA hit $60,000 mark, which will definitely be possible by majority of us if we are a long-term dedicated investors. Even if we are investing in tits and bits, and if we continue to stay invested for years together and keep investing, we will definitely hit that 60,000 mark. That is close to 42 lakhs Indian rupees. Many would definitely hit that. But what is the catch is, if the person dies, the account holder dies, 40% of the accumulated amount goes to the US government. We try to look for the best cashback card which is offering even 0.25% extra. Here we are ready to shell out 40% to the US government directly. So this is the problem with dealing directly with brokers which are investing in USA listed market like New York Stock Exchange or Nasdaq. But there is a way out. Now, if you are investing in Sarva Invest, now they are going to invest through an institutional route. So that institutional route is not subjected to estate taxes. You will be paying a nominal charge of 0.8% on the whole amount which the Sarva manages. But they are giving you a globally diversified portfolio. 0.8% per year is better than 40%.
Mm-hmm.
And Sarva trade is free, zero commission. Sarva trade is free, zero commission. But again, you are going to invest in the US market. And if the assets cross 60,000, again the estate taxes kick in.
Agreed.
Many platforms like even SDFC Global Invest has come up with multiple platforms. Then Ind Money or whatever entity they deal with Drive Wealth, basically. We cannot open an account directly with Drive Wealth because they provide this institutional route for many of the things. For majority, mutual fund is the simplest and easiest way to have international exposure. Because what happens in mutual fund is one doesn't have to bear the transfer cost, everything, all the returns are after the transfer cost and after the expense ratio of the funds. No,
But Deepak, what my point is, see what is happening with this mutual fund is they have a limit. When that limit is reached, No.
Yes.
When that limit is reached, then that particular mutual fund SIP stops.
Yeah, right.
That is the biggest disadvantage, and then you have to keep on having a track whether it was now what should be done and what next.
That's it. That was a $7 billion limit imposed by the RBI, Reserve Bank of India. So
Yeah.
at the combined industry level, if that mark hits, as per RBI, it will stop. But certain funds, even that mark was hit, like Kotak Nasdaq 100 fund, which was investing in the ETF, it did not stop because it was going through the ETF route. So when they are investing in the ETF directly there, they are not subjected to. So these fund houses are also coming up with ways to circumvent that $7 billion hurdle which is happening through the mutual fund route. Or the other ways have assets like investing directly with interactive broker and keeping the cost low, provided one is okay with that 20% TCS. Company information provided different to US public and outside US investors. Is it true? Investment value reduced at the time of liquidation? No, investment value doesn't reduce at the time of liquidation. When you are selling any ETFs or any stocks, you will be provided the market price on that particular day. So valuation doesn't reduce. And only thing is the taxes have to be managed well. You need a CA, a proper CA, who can do the tabulation if you are investing directly with any broker. Routes available for international markets from UAE apart from mutual funds. There are many routes. Most simple route is Sarva, which is again UAE based. Interactive broker is there. Then we have Swiss Code. Swiss Code, there are two entities. One is Swiss Code Switzerland, which has a custody fees also. And there is one more Swiss Code Luxembourg, which doesn't have any custody fees. Only thing is it has the inactivity fees. If you don't trade in a year or invest in a month, every month $16 are going to be deducted. But if you want to totally avoid any US entity, Swiss Code is the way to go for it. You're not dealing with any US entity. So tomorrow, no US president will come to you asking for that 40% dakshina from you. Will this 20% tax rule affect investments in Indian international funds? Will it be applicable to fresh investments in this, like S&P 500, Navi, VTI? No, it will not be affect. It will not affect any mutual fund investor. TCS is not going to affect any mutual fund investor. TCS is only applicable for direct remittance of Indian rupees outside India by the investor at the individual level. It is not applicable to fund houses. So when you are investing in fund houses, the mutual funds, they are going to transfer the rupees at their own level into dollars or euros or whichever country they are investing. And TCS is not applicable for mutual funds at that time. It's only for individual level only. Yes, if you are investing in any part of the world outside USA, in USA, we are considered as alien investors. We are aliens to them, American market. So when you are aliens, you are subjected to the estate taxes. So they have the mechanism to track the investor is no longer there, and they will freeze the account. Basically, they do is they freeze the account, and the nominee or the legal hire has to approach the IRS department of the USA, and they have to submit the death certificate, and 40% of the US assets will be held with them. Any assets over and above $60,000 is going to belong to the US for a alien investor. So alien investor can be anyone, an Indian sitting in India, an Indian sitting in UAE, Indian sitting in Switzerland, or Indian sitting in Australia. Any US assets held over there. Overseas income of any Indian will be taxed at the tax slab of the investor. So if anyone is investing overseas, if he or she is in 20% tax bracket, he or she will be taxed at 20% only. And people may think that 60,000 mark is a too big amount. In a long run, if one is a serious investor, he or she will definitely touch the $60,000 mark, definitely, for sure. Yes, you can add the spouse. There's no issue with adding the spouse. But again, if you have a joint account with the spouse, the things become much more complicated in dealing with US entities. Yes, Rakesh bhai, that's really right. In India, when you are investing in mutual fund, you have the option of adding anyone or survivor for the spouse. So if husband is no longer there, the wife takes over, or wife is no longer there, the husband takes over. So the mode of holding is quite simple in Indian scenario, anyone or survivor, but not so in case of international investing. No, Motilal Oswal FOF is not going to be subjected to estate taxes, because here you are investing through an institutional route. Any route taken through institutional level, you are not subjected to estate taxes. It's only as an individual investor, if you're dealing with a US entity, then the estate taxes come into picture. That's why for majority of us, mutual funds are the better route, because the family, if we are no longer there, the family should definitely get their due money. Thing is, people should think beyond this mid caps, small caps, large caps, multi caps, flexi caps, and just keep fiddling in the Indian markets alone. We all are hopeful for Indian growth. We definitely want to continue to progress. But when it comes to individual money management skill or managing the risk, global diversification should definitely be there. Europe ETF has no tax, right? It does have tax, not on the capital gain, but on the dividends received, but at a lower rate. Like if you have any ETFs listed in the London Stock Exchange, the dividends will be taxed at 15% compared to 30% in a US entity for alien investors. It all depends on goal based thing. Na? For those who want to send their children to PG in US, does it make more sense for them to invest through Sarva, interactive brokers, rather than Indian international mutual funds? There's no comparative study. It's like one solution fits all. Na? So we should be clear what we want, whether we really want our kids to go overseas and study. If we are sure on it, then it is better to keep the investments in dollars, so that, or in euros or any foreign currency, where it can be easily be liquidated and used for the particular goal. So that's the way out. So there is nothing like comparative study mutual funds. Even let's say someone is investing through the Indian mutual fund houses. So if they need any money for the education, what maximum is it going to affect? One will have to pay 3% cross currency charges. That will be one time charges. Transfer the whole fees at one go in the local bank account. But if the person has 10 years for the investments to grow, that would have given a substantial return also. So just taking 3% of it will not make us poor again. So it's again a ease of investment. What we are comfortable, that route should be selected. Vanguard funds in US markets have better returns than Europe markets. It is not so. Uh, the only thing is Vanguard funds, the same equivalent funds in Europe, if you compare them, they have a low expense ratio. American funds have very low expense ratio. Like if we consider VT fund, that is Vanguard Total World Market Index Fund, it has an expense ratio of 0.07%, whereas its European counterpart VWRA has an expense ratio of 0.22%, that is 3 times more. So it is only that we want to avoid the estate taxes, we are investing there. That's the only thing. So performance doesn't matter. What should matter is how comfortable you are investing, which platform you are comfortable. Select that. Peace of mind is more important than trying to worry about the performance. And when in our absence, the family should have access to the money. See, any possible way to reduce currency transfer charge in Sarva for UAE residents? The currency transfer charge is almost negligible because Sarva has a bank, Emirates NBD bank. So you are making a local transfer, and that local transfer, they are providing a best available rate for conversion into dollars. So what can be much more cheaper than making a local UAE to UAE transfer, AED to AED, and that AED is going to convert to USD. Other thing is, if you have a USD dollar, you can fund the Sarva account in USD directly. So for every dollar you get $1. If you can do that, that is also fair enough. Yeah, there is definitely a recency bias. US has done very well last 10 years due to tech. Yes, definitely. That's why we need to globally diversify. Just not restrict to America or just not restrict to India. We do not know which country will perform in what way. Swiss Code and Sarva Invest have no 60K USD limit. Swiss Code, again, it depends on which funds are investing. If you are dealing with non-USA listed funds, the funds which are not listed in USA, like whether it's been NASDAQ or New York Stock Exchange, you will not be subjected to estate taxes there. So that's why it is important. In Sarva Invest, you will be paying 0.8% for amount less than $50,000. And again, it's a tied system. If the investment amount crosses 100K, you'll just be paying 0.3% management fees in Sarva. So you pay a small price, but you avoid the whole estate taxes altogether by Sarva Invest. And Sarva Invest, if you have a look, it is actually a globally diversified portfolio. Put to invest in ADNOC, another 8 years, Zurich, then term plan. See, ADNOC and all IPOs are one single small company in a small country. Here we are referring to a globally diversification. A big country like India or America can have local geopolitical risk. A small country anywhere in Middle East will definitely have a higher risk. So our hard-earned money deserves more respect than being subjected to some IPOs. Every company will come up with IPOs today or the other, today or tomorrow. One should not fall for IPOs at least. If your long-term thing is wealth creation, it should be globally diversified. Simple, low-cost index investing should be the way forward. Because today's active funds may not perform tomorrow, and you'll have to continuously monitor the portfolio year on year. Vested investment platform, YouTubers don't listen to YouTubers. Simply avoid vested platform. Interactive broker is good. You can check out Sarva is also good even for Indian residents. Sarva is also good. You have a local team to speak to. You can WhatsApp them, you can call them, you can bug them, you can mail them. You have real humans to interact with. Vested, I have tried every account, not for investment, just for opening and checking out the feasibility. I am basically sticking on personally with Sarva and IBKR only, and I am just considering Swissquote Luxembourg just to avoid this US entity altogether. Whatever holdings I have, you can transfer it to any broker in the world. In today's digitalized world, even if you are having any securities with any broker, you can transfer it to other broker online.
Hello.
Yes,
Am I audible?
yes.
So don't go by my voice because it's my throat is choked. But suppose we are talking about as a long-term investor, so we easily expect that we should be getting around 14% return. Suppose 10 years time.
Yes.
So what is the expected return in foreign markets comparing the same time period?
the foreign market is again a generic term. It all depends on, sir, in Indian market there are so many funds available out there. So in Indian market also for domestic investments, the returns vary widely. So when you are referring to global market, which fund you select again matters. If you are going by a single fund, even single fund like VT fund, which is US total, which is total world stock market fund, historically it has given a return of 13.5% over the past 30 years or so in dollars. So if you compare it with the dollar appreciation compared to INR, the returns are much more higher. But past performance cannot go for. That's why this is our thought process that we only look for return. 14%. If you are not getting 14%, you will be disappointed. Best is to keep the expectation low, keep investing in a low cost ETFs and diversify. That's only in our control.
That is true.
So there are many ways we can these platforms which to select. We can have one more talk on that actually. Which are the platforms? Which platform to use? What are the pros and cons of every platform? We can, if people are interested, we can have a talk on that. We can discuss. We should at least discuss. People should be there to share, not just one person. Everyone should be sharing. Everyone can have their own point of view, and we can make it a good knowledge sharing platform. Like which platform is good? People can go through the pros and cons. We can definitely have a thing on that, sir.
Yeah, we need to have this because the thing is, there are so many platforms. To understand what exactly is the pros, cons, what are the expenses, what are the exposure, and how old is the platform, and how it is backed by its securities or collaterals. That is very important, what I feel. So this needs more discussion, and selecting a platform should be based on certain criteria or checklists.
Definitely, that should be there. And you should also have a good customer support because you're dealing with an entity which doesn't have physical existence in India. Actually, people have been with Ind Money and they are investing, and now Ind Money has stopped that LRS and direct remit and all. So basically, their assets are stuck there. They cannot make further fresh investments also. So people are not aware of the risk. It's just that US investment started picking up after this COVID crisis and all. People are jumping into overseas investment without realizing the risk, without understanding what could be the charges they're paying, the cross currency charges. How do you keep it low? How do you? What are the estate taxes? What are the fees of various platforms? Is there really
That is,
truly zero brokerage platform, or it's just a myth? There are many questions to be answered, or I have a checklist on it.
like you see, Sarva has got a very good customer backup.
Yes, definitely.
To speak to them, mail them, chat with them, they are always available. I tell you, I have not seen Indian platforms which are based in India also so friendly and so easy approachable.
Yeah, they're really good. And another reason I personally stick on to Sarva Invest is they have that fees of 0.8%. I got it waived off. So that is totally free for me. 0%. I pay 0%. I only pay the ETF cost which is involved over there. And the ETF cost is maximum 0.1%, which is fair enough. I'm not paying even 0.8% to Sarva.
You are an esteemed, what should I tell you?
No. Everyone. There was a offer there. If you refer 5 friends, and if they join with the referral link, and the fees get waived off.
Achha, that is
So
a
there
good
was a
thing.
15 days. In 15 days, you have to refer. 15 days. So that was their initial journey. So those who completed it, they have been offered free for life. You can open any number of accounts, and you can invest through them.
We should do a presentation on the platforms available for international exposure.
Right. If we have to do that, should be a separate topic. That every time we have one platform, we see the pros and cons of one platform, next platform.
But we see, if we see only one platform, then we'll not be able to compare.
We can have a comparative thing also. We can have a comparative thing, quick comparative thing.
Comparison will give us a better outlook to which one to choose. for
Yes,
even resident Indians as well as for non-resident Indians.
yes. Even
We can
ICICI Direct, yeah.
tell me. Start.
Even ICICI Direct has a tie-up with Interactive Broker. Now, if you go through ICICI Direct, Interactive Broker, you will be subjected to the fees set by the ICICI Direct. But if you're dealing with Interactive Broker, you have a tied system there of the brokerage, which is quite less. Any trade which you buy, it is flat $2. Flat $2. ETF, any quantity buy, it is flat $2. So that's the advantage there.
And we can open an account with Interactive Broker directly online.
Yes, directly online. You can open interactivebroker.co.in. Now that's the site. And they have a customer care support in Mumbai also. They have the telephone lines over there. And the other advantage for those based in UAE for dealing with Interactive Broker is Interactive Broker has started accepting dirham deposit. So it will be dirham to dirham deposit. You're not losing any money there, except for what the bank may charge. Some banks charge 100 dirhams or 110 dirhams, and only few banks permit the transfer of dirhams outside UAE. Only few banks. And HSBC is one of the banks which has zero charges for international transfer. And when the dirham hits there, the dirham can be converted into dollar with a very good rate there compared to even the bank rates.
Deepak, Shobha this side. No, you can also tell them that today it was only about why should we invest, and in consecutive sessions you will also be addressing that where to invest, how to invest, and each platform in detail from next Friday, and like that continuously we will be having sessions.
And yeah, that definitely we can do it, because this was just why should we invest internationally. There are various platforms, and people should have a like comparison, and they can select what is good for them. जिसको म्यूचुअल फंड अच्छा लगे, they can go buy that into Interactive Broker, Serva, or any account. They can go through any route, but they should avoid the things which these Indian platforms are offering, like Vested ho ya koi ho. There are a lot many issues with those platforms actually. You cannot. I have started investing in ETF through Interactive Broker single account, considering estate taxes. How much should I limit my investments? You cannot limit your investments. In that case, you can go for the funds which are domiciled outside USA. Like instead of going through Vanguard funds which are domiciled in USA, you can go for the Vanguard funds which are domiciled or which are traded on London Stock Exchange. So you are basically not dealing with the assets held in USA. But the again catch point is Interactive Broker is again US entity, US based broker. So tomorrow something happens, there is no guarantee that estate taxes may not apply to non-US assets also. So if one wants to completely avoid there are two simple options. One is Sarva Invest, and another one is Swiss Quote. Saxo Bank is also this. There is one more platform, Saxo Bank, but the charges are high, quite high. Saxo Bank.
What are the disadvantages of Serva? I think why should we go to any other platform when we have used Serva and we are happy with it? Your voice is cracking.
Serva, the disadvantage is only the fees no, for Serva Invest. Serva Trade is free, zero commission.
Serva Invest is what is the fees?
Serva Invest, if you are charged 0.8% the fees, if the portfolio is less than 25,000, and if it is up to 50,000, you'll be charged 0.7, and if it is more than 1 lakh, you'll be charged 0.2 or 0.3% as a management fee, over and above what the ETFs are offering. But that is a sure shot way of insulating one through the estate taxes actually.
I think seeing all Serva is the best.
Serva is best because Swiss Code, there are two things. Swiss code Luxembourg and Swiss code UAE. Swiss code UAE has
Some
custody
problem with
fees.
your network.
You can hear me now?
Yeah, better.
Yeah. The problem with Swiss code UAE is 0.1% custody fees. Whatever is the asset, 0.1% on that. And also the commissions are high. 0.2% is the commission. 0.2% is the commission for every buying selling.
And there is some dormant fees also.
Yeah, dormant fees is also there. If you don't trade in a month, $16 are going to be deducted.
It's a pretty good amount of money.
Yes, that happens. But when the portfolio, so Swiss code Luxembourg is good in that way.
I feel Sarva is rather than going into so.
How are you finding the platform, Sarva? Amit bhai?
What is the customer support?
Yes.
ICICI, there is no problem. See, I am a resident Indian, so at ICICI, I have no problem in transferring the money.
Yeah, right.
Charges are there. Charges will be everywhere.
Yes, that's true.
The best part is dormant charges are not there.
Yes.
Somebody is not able to invest, then he is stuck if there are dormant charges.
Yes. And other thing is, Sarva has also come up with Sarva Save. So that is like a liquid mutual fund in India, na? That is offering a fixed return of 3% on any amount you hold with them, and that interest is on dollar only. So any money you park in that Sarva Save, you can transfer it to the Sarva Invest also, internal transfer, and whatever money you invest in that Sarva Save, you will get a 3% interest on that.
It's something like an arbitrage you shift to, or a liquid fund.
Yeah, liquid fund type. Correct.
Yes.
So 3% on dollar is quite a significant interest actually. Because if you consider depreciation of rupee compared to dollar, the depreciation is 4.5 to 4.6% per annum. So you add 3% to it, you're getting 7.7% return here in rupees.
Exactly. Then why do we go for this interactive broker then?
Interactive broker, because to buy the securities listed on London Stock Exchange, to circumvent this estate taxes, no? That's the intent. People go for interactive broker.
But interactive broker is based in US.
Yes, US entity. So it is like dealing with the US devil only, but they have access to the London Stock Exchange, and theoretically those are not assets held in USA. If you are buying any security held in the London Stock Exchange, traded on London Stock Exchange.
So you mean to say to international exposure, you should have Sarva as well as interactive broker.
Yeah, or if someone wants to keep it simple, everything can be in Sarva Invest actually. Invest,
Yeah,
not the trade.
Sarva Invest is pretty good.
Because if people go through that platform itself, you can adjust the equity and debt also by the risk categorization. They have the global bonds also, US global bonds, US bonds, and the non-US global bonds also. So they're diversifying in equity also and debt also. They are having ETFs in US market, developing economy, some allocation in real estate also, US real estate also, and the global bonds also. So actually that's the simplistic portfolio. And with the minimal charges, as they're investing through the institutional route, the brokerage is kept extremely low on that buying and selling also.
Exactly.
And basically they are using Saxo Bank as a broker there. Whereas if we route our investment through Saxo Bank, the charges are quite high through Saxo Bank.
I think best is that only.
Yes, Sarva Invest is really good. Many people are afraid that it will close and all other things they have speculate, but it is governed by both Abu Dhabi authority and Dubai authority both, and they have the physical presence also here. They cannot just vanish in thin air. And the securities are after all held with Saxo Bank, not with even Sarva.
Good.
It's only that the Indian resident should select a bank account which can keep the cost less if they want to directly invest.
ICICI is good, I suppose.
ICICI, after this presentation, Amit bhai, you just share me the ICICI ka charge kya hai. I'll share you the HSBC ka thing. You can compare it with that.
Okay.
So because investment is going to be lifelong, you'll be regularly investing. So if the cost can be kept low, the transfer cost, it will serve the purpose actually.
Sorry, come again. I could not get you. Last
Like
sentence.
investments are going to be lifelong, regular investments. So regularly you'll be transferring the money. So if the cost can be kept low, it has a significant impact on the returns also then.
Exactly. In the long run, you will have better returns. Expenses are low.
Expenses, transfer expenses are low, and the investment cost is low. The returns automatically come up.
The thing is, it's my personal. I forget to transfer this thing. Now every month you need to transfer some amount to Sarva. That is what has to be taken care of.
Yeah, for international transfer, even that is the problem. But those who are in UAE, the advantage is they have the SIP also now. Like this, na Indian scenario. You can set up a recurring transfer every month. You don't have to worry. Salary मिल गया, cut हो गया, invest हो गया. You don't have to worry at all. Because what happens with platforms like Interactive Broker, people go to buy a globally diversified portfolio and they are lured by returns and they have exposure to much larger number of funds compared to even Indian. No? They get lost. They forget why they were with Interactive Broker and they end up having multiple ETFs. That is also again problem. In Sarva, it will keep the thing simple actually. Sarva Invest, na? वही fund say it is globally diversified. Whatever money you put, it will be as per the allocation invested. The thing is done and dusted.
But simple should be the key.
Yes, because Interactive Broker is the ocean. You are having access to ocean. Ocean is you are having access to 32 markets from that broker. People try to experiment a lot. People who are having zero data, they experiment a lot. They have multiple stocks, multiple ETFs, so many funds there. Imagine having access to 32 markets in the world. People tend to experiment a lot there.
Great, bhai. Lot of information.
I think we should, if people agree, we should have a discussion about these platforms also. Actually, Amit bhai, a detailed discussion.
Yes. Next Friday.
Yeah,
or
sure.
whenever you are comfortable.
Sure. We can have all the platforms mentioned, all the platforms, pros and cons of every platform, and how effectively one can transfer from every country. One thing which I found is HSBC is good because HSBC has a global presence. It's one of the bank account which has a true international presence, and the global transfers are free actually. Be it Oman, be it UAE, be it European countries, even HSBC USA account, the global transfers are free. Even from Indian account, na, be it NRI, HSBC account or resident account, the transfer costs are zero. It's only the GST charges which one pays.
Okay, bhai.
And other advantage for NRIs for HSBC account is, let's say someone has a HSBC account in India and a HSBC account in outside India anywhere. The transfer rates are better. And the amount hits immediately. HSBC to HSBC anywhere in the world, the amount hits immediately. So there is no lag time also actually in that case.
even from ICICI from Indian account you send to
Yes.
Sarva, it takes
Yes. Yes.
around I think 24 to 48 hours.
Yeah. It takes time. It takes some time. It takes time. I tried transferring from HSBC India to Sarva account and also to interact to broker just to test. From HSBC to Sarva, it took 1 day, 1 working day. I did it on Monday and I got it on Tuesday. And to interact to broker, it took 2 days. HSBC to interact to broker, 2 days.
Okay, from ICICI it takes around 24 to 48 hours. 48 hours
Yes.
is from a resident account.
Yes. Same thing. See, it usually takes that time.
Yeah, HSBC I think is a day faster.
But it's only that whichever one should select one bank which has the lowest, which gives a good rate. That should be the criteria, Meresab, not the rate of transfer. Rate of transfer will vary.
What is the ICICI rate?
After this presentation, Amit bhai, I will also check my ICCI. I'll share you the rate. You also share what rate are you getting to Sarva. I'll share what rate I'm getting from Indian HSBC to Sarva.
Okay.
So that we can also compare and we can also bring down the cost. No? Because anyone who has attended this this meeting, everyone will be definitely be interested in international investing, and people should definitely invest internationally.
See, majority are interested. The thing is, they don't know what route to take, what platform to choose, and the problem is they are very scared. And another thing is, you don't have a physical bank here to go inside the bank. Okay, come on, I want to open accounts. Give me an application. So people are not that tech friendly. That is an issue. But otherwise, I think there should not be any problem.
No, but Amit bhai, what in digital world, where the bank account is doesn't matter actually. Now
Exactly, true.
Now I have a HSBC account in Bangalore. I have never been to that branch. I don't know where is it. Doesn't matter. Everything is linked. Doesn't matter. Money can be moved within seconds from one country to another country. Especially if it is the same bank, HSBC, or some bank like even Standard Chartered. Even Standard Chartered is one bank which gives good transfer. And Standard Chartered also has presence in India and presence in other countries. And they also get synchronized. And the other advantage for NRIs is if someone has a HSBC account in the country of residence and Indian. So if they open let's say someone opens a UAE account, they will also see the Indian account there in that same. So it's a synchronization of the accounts across. And they can immediately transfer from year to there to year. Even someone was asking a question that if they need money in dollars for some students' education, the thing is simple. Even if they are going through mutual fund route, and if they are investing in mutual funds internationally through Indian fund houses, let's say it has been 10 years of investment and that has given a CAGR of 17% per year on an average. CAGR will not be 17% every year on and off, but 10 years if it is given 17% CAGR, they would have built quite a good corpus. Now if they want dollar money or euro money, they can definitely transfer rupees to the destination country. What they will lose is 2 to 3% of the money. That's it. But the money would have grown for 10-15 years, whatever amount they would have invested. So one-time transfer cost doesn't really matter, because anyone who is going outside the country of residence or outside the country of the citizenship, if they're spending in some other country, cross currency charges jayenge. If someone is going to Europe, if a big vacation, they will definitely bear the transfer cost, which sometimes will be higher than the education cost of many children. A Europe trip for a family can be quite expensive than even education cost. So when people are not bothered about that cross currency charges for a vacation, why be bothered for a cross currency charges for a child's important education? Doesn't matter. So one should select a platform which one is comfortable actually.
And in this we have forgotten. And in this we have forgotten that 40% also.
Which 40%?
Always that 40% what that's the government of US is sitting on 40% of yours.
Yes. That is a big risk. We are saying, yeah, 40% of the corpus over and above 60,000 is gone to US government is a disaster for the family actually.
And I think $60,000 kitna hota hoga zyada I don't know.
48 lakhs पकड़ लीजिए आप.
फिर तो आपका 2 साल में आ जाएगा.
आराम से किसी का भी हो जाएगा अमित भाई, किसी का. If someone is a serious investor, believe me, someone is a
आराम से
serious
होगा.
investor, 48 lakhs is a very small amount. क्रॉस हो जाएगा. किसी का 1 साल में हो जाएगा, किसी का 2, किसी का 3, किसी का 5, 10, 15, 20, whatever, but that amount will definitely cross. And if
और
the
फिर
family
उसके
is
बाद you are stuck.
stuck,
Something goes wrong.
and the family is running around trying to get the money back. And the other
यहाँ
advantage of Sarva is you have a wealth beneficiary nomination there. So if you make the wife their wealth beneficiary, na, so Sarva is directly going to hand over the custody after the death of the account holder to that particular person.
I
So it's like,
don't think there is anything better than Sarva. I don't know. I have
because
read so many of them. I have
I
not got it.
I
Sorry.
I had spoken to them for this for about 1 hour or so with the founder, and asked them that today if I die, what is the process? How will my wife claim that money? They said that she is already the beneficiary. She just has to produce a death certificate, and we'll take care of the rest of the things. She wants money in cash in her bank account; it will come there, or she wants the securities to be transferred. Even that is possible. So
Sometimes I
for
feel
that,
why should we get into all this Sarva?
yes. So this Sarva is a really good platform. Long back 5 years ago, I wanted to open up account with Sarva. It was Sarva X at that time. They had some other broker. At that time, I could not open the account. So some document was missing or something, and I let it go. So 2 years ago, I opened up with their new platform and all, and it really went well soon. And they are very good in the customer support also actually. The thing is, you have real people to speak to at that time.
No robots.
No robots, nothing. They'll call you also. If you have any doubt, they call you. Email. They have the physical offices. Many friends have gone. They have visited the premises. They have gone through the whole detail. That is it safe? They have all the documentation that they are properly regulated. They are not going to run away with their money. They have everything. That's the most important risk in investments.
28 से 14 लोग हो गए.
हाँ. If people are interested, we can have a talk by Sarva people also once.
अरे you are Sarva, man.
They it's from the horse's mouth, Amit bhai.
अरे for us you are the horse.
नहीं. Can you please tell what are the disadvantages of cons of investing in Navi US total stock market FOF? Any reasons to avoid? There is definitely no reason to avoid, but Navi US total stock market fund is only US specific. So you are diversifying in only another country, one more country other than India, if you have existing investments. So that is not true diversification. True diversification is not just 1 or 2 countries. It is actually globally diversified as per the weightage. That's the only disadvantage. But if you want a diversified, truly diversified US based fund, that is the way to go forward. Navi US total market fund of fund or Motilal S&P 500, almost similar. Another one was Vidya asked, how much should I limit my investment? Don't limit your investments just for estate taxes. There are ways to avoid the estate taxes. Avoid that. Your asset should be much above 60,000 limit mark. Don't restrict yourself to just 60,000. If you want to avoid estate taxes, deal with a US entity and limit your investment to 60,000. No one would want to limit their investment to $60,000. Everyone in the group or everyone listening definitely has the propensity to go much beyond that 60,000 mark, and that estate taxes should not deter us. There are ways to avoid it, and one should definitely avoid it. Why? We try to save taxes. Why shouldn't we save such a big tax, that is death tax? We can definitely avoid it. Yes, someone said HSBC also exempt in mobile app, it seems. Yes, that's true. Because if you make HSBC transfer through internet banking, you'll be charged. Through the mobile app, it is fair enough. It is zero cost. Someone said, I made a mistake of already taking future in Zurich, then term plan. Now, can I reduce the installment to half because already Zurich would have recovered the insurance part by 1.5 years? The thing is, don't reduce it. Just stop the investments, redeem the amount, whatever losses you have made, you can recover it in better investments. Just redeem the things, redeem it once for all. That is why we have to declutter our garden also. We have to remove the weeds. These are all weeds. Any insurance other than term and health insurance is a weed in the investment. Those weeds have to be removed. We can definitely have a presentation on how to invest in US from UAE. Not just US. Why just think about US? You can have a globally diversified portfolio without just worrying about US. Tomorrow, a Sunki president comes in US, our investments are doomed again. Anyone has any other inputs, sir? Anyone?
Bhai, that's all.
So Amit bhai, we call it a day. फिर आप जब
Yeah,
free हो
yeah.
बताओ. We will do it, sir, again.
Done. Next Friday, same time.
Done, sir. Done. आप वो शेयर
Done.
करो सर. वो ICICI का कितना है वो शेयर करो.
Yeah, मैं
Let's see
share
what's
करता
the
हूँ.
transfer cost.
Done. I'll get back. Let
Okay,
me
okay,
check
okay,
and get back.
okay.
Okay.
Okay. Take care, everyone. Thank you, everyone, for attending. Thank you.
Thank you.
Thank you.
Bye-bye.
Thank you. Thank you. Bye.
Send the letter.